So we're Group 10, and this is our market or our report on the market update from April 9th to April 14th. And so just to start with the economic conditions throughout the world and throughout the United States, China announced last week that their GDP grew 6.8% in the first quarter of 2018. Meanwhile, the US GDP is estimated to only have grown about 2% in the first quarter of 2018. And all the talks in Washington about the higher tariffs has been really disruptive in the first quarter in the stock markets, and it continues to disrupt the markets. And the stocks began the first quarter of 2018 with about a 10% correction, but they've started to rebound. And so we'll kind of see throughout last week, the Dow Jones went up by 1.8%, and the S&P 500 went up by 2%, and the NASDAQ index went up by 2.8%. And the NASDAQ's the only index that's still up on the year. The S&P and Dow are almost back to even, but they're both still in the negatives on the year. But it was a great week for the economy. And you can see as well that the 10-year Treasury yield barely moved at all, while the oil has been the surprising one. It moved up by 8.4% per barrel, which is also gas prices shot up throughout last week. And with mergers and acquisitions throughout America, a big talk that started last week was the former chairman of Qualcomm, Paul Jacobs, is attempting to take Qualcomm private. And when he announced that, the shares shot up that day by 3.3%. And as well with Qualcomm and their merger with NXP that's been in talks for a couple months, the deadline was extended last week due to tensions with the US and China. And Sprint and T-Mobile were in talks last fall of merging, and they stopped talking around October. And just last week, those talks began again. And right when they began, when they announced it, their stock prices both rose by over 5%. And then Alteris Capital Unit acquired Analogic, which is a medical imaging products company, for $1.1 billion. And April, in general, has been a really slow month for IPOs. But last week especially, there was only 2 IPOs throughout the week. Spotify was the week before, which was a huge IPO. We're almost $10 billion. But last week, Zuora Inc. Raised $154 million, and Pure Acquisition Corp raised $360 million in their IPO. And then, just a fun fact, Pluralsight, which is a company from Utah, announced that they are going to have an IPO, which will raise about $100 million.
So, going into regulatory, accounting, and tax news, the Fed announced that it would provide an early adoption window for the new accounting standard regarding the current expected credit losses. This means the company will have 3 years to adopt the new standards instead of a one-day change. The Fed also put out proposals to further loosen the Dodd-Frank Act. They proposed to change the big bank stress test to make them more firm-specific and increase the flexibility for firms. This would lead to more firm-specific requirements and give companies more flexibility, only to required to meet 14 capital requirements instead of the current 24. This also works in a way that forces banks to hold more capital following a bad score on such an annual test. The final effect is expected to increase capital requirements for GSIBs and reduce for other firms. The other proposal from the Federal Reserve is to change the supplementary leverage ratio. These changes are also calibrated to be more firm-specific, considering the risk-based capital surcharge. Regarding investment banking industry news, you can see that generally investment banks benefit from low tax rates and increased earning from trading divisions as a result of the increased volatility in the market. Regulators have proposed that Wells Fargo to pay $1 billion in penalties to resolve probes in auto insurance and mortgage lending abuses. This overshadows the fact that Wells Fargo reported at 1.12 earnings per share, beating the consensus of 107. And there's a strong reason to think that it would be the biggest penalty that the CFPB has ever charged a bank, says a reporter at the American Banker. The negotiations for the fines could be wrapped up in the coming few weeks. JP Morgan and Citigroup also came in with earnings this week, and they both beat their consensus for earnings per share. And FIC trading for Citi actually suffered, but their equity trading divisions benefited and from the increased volatility and actually went up 38%. And the turbulence between JP Morgan and cryptocurrencies continues as the bank faces a crypto-related lawsuits for charging customers surprise fees when purchasing cryptocurrencies with their credit cards.
In the currency markets, the pound hit a post-Brexit high as the dollar fell. Ever since Britain decided to leave the European Union, the pound has hit the highest level ever since they decided to do that. And this is a sign of greater optimism towards the possibility of Brexit being a softer hit than most people thought it would be, saying that it could be a monumental crisis. And then there were sharp drops in currencies hinting at spreading volatility. Russian ruble, Turkish lira, and other currencies are experiencing higher volatility as an indicator that the turmoil in stocks may be affecting other assets. This brings worry that the political strife in the U.S. will be felt worldwide. And then millions worth of Bitcoin went missing in an Indian exchange. About 3 million was admitted to be missing last week. As you see in the U.S. dollar index, there's a couple notable points. In the April 9th portion, that first highlighted bit, the Fed's Kaplan said that he sees the possibility of raising rates twice more this year, which brought a little bit of uncertainty in the markets. And then there were also some political incidents in being the federal officials raided President Trump's lawyers' files that they wanted in an investigation. And then there was more political unrest in Syria. And then in the April 10th portion, the U.S. was trying to gather allies in a responsive strike to Syria over what had been done with chemical weapons. Federal authorities also, during the raid, now more coming out about them seeking files in this whole Stormy Daniels case. And then April 11th and 12th, Paul Ryan, the Speaker of the House, announced his retirement in the coming future. And the Trump administration also announced working on a relief package for farmers affected by the tariffs that they're announcing. In the commodities market, the China-U.S. trade dispute could knock oil demand. The International Energy Agency warned that the world's appetite for oil could be dented if the U.S. and China engaged in a trade war. They forecasted that oil demand will continue to grow by 1.5 billion barrels a day in 2018, but the new trade war poses a risk to that demand. And then OPEC's output fell in March, and this is because of them needing to be in compliance with the new cartel's agreement to cut production, this being something that they came out and said recently. The other commodity of worth noting this past week was coal, losing face in China. China is the world's largest buyer of thermal coal, and they're in some financial trouble. China's programs have narrowed coal's ability to thrive in the country. As you can see here, this is the U.S. crude oil index, just steadily increasing this week, which has been seen in gas prices throughout the U.S. And then here's the coal index that's going all over the place. Increasing volatility on one side, we have China that's causing problems for the industry. And on the other side here in the U.S., the president is making promises for protection of coal. Political events of note, the U.S., UK, and France launched a missile strike against Syria in a joint effort the three countries came together to strike at chemical weapons facilities belonging to the Assad regime. And this was in direct response to a chemical weapons attack allegedly used by Assad. And then China delays deal reviews as U.S. trade frictions build. As the potential trade war talk heats up, talk is slowing about acquisition of the semiconductor company NXP by Qualcomm. This is widely seen as a deal very critical to Qualcomm's future. And then the hedge fund and LBO markets, industries, the hedge fund star John Paulson story came out on the Wall Street Journal about him owing the IRS $1 billion for one of the greatest financial bets of all time that he made during the financial crisis. His tax bill has come due. He bet against subprime mortgages in 2008 and earned about $15 billion in profits, and his federal and state taxes totaled to about $1 billion. And then hedge funds are turning bearish on tech giants. This is the most negative they've been about the technology sector in nearly 7 years. And then private equity firm Alteris is set to acquire Analogic for $1.1 billion. This is an $84 deal, per share deal that represents a 25% premium to Analogic's closing price that was on June 7th, 2017. This deal is expected to close mid-2018. Thank you very much.